Hello friends, welcome to the live. I'm glad you're here. If you're catching the replay, you're in the right place too. Today we are talking about what to do if you missed estimated tax payment in 2025 and on track to be assessed a penalty. Spoiler, there is a clean IRS approved fix that can make those penalties basically disappear. Stick with me for a few minutes and if you want my one-page checklist afterward, DM me the word eraser and I will send it to you. I talk to smart, successful business owners every week. They are hiring, growing, taking care of family, and then boom, an IRS penalty shows up. If that's you, breathe. You're not behind. You just need the right move. And here is what stinks. When estimates are late, the IRS charges interest around 7% a year and it compounds daily. Paying today stops it from growing, but it doesn't erase what already piled up. And that's the part that we're going to fix today. And here is the play. Step 1, take a distribution from your IRA. That's usually easiest, or from a 401k if your plan allows it. Step 2, tell the custodian to withhold the amount of federal tax that you are short for 2025. Step 3, within 60 days, you put the full gross amount back using other cash. When you do that, the withdrawal itself isn't income and there is no early withdrawal penalty. The magic, IRS withholding is treated as if it was paid evenly all year. So one big withholding now gets spread across all 4 quarters and wipes out those underpayment penalties. How beautiful it is. Maybe you're thinking, but it's already late in the year, and am I too late? We're in November. No, withholding from IRA withdrawal is special. It counts as if you paid all year, even if you do it on December 30th. That's why this is the cleanup move. And let me show you an example. Say you are $16,000 short on 2025 estimates. You take a $40,000 IRA distribution and have $16,000 withheld for federal tax. Within 60 days, you redeposit the full $40,000 back into your IRA from your cash, whatever your cash sources. The IRS treats that $16,000 as if it were paid in chunks all year, quarter by quarter. So the underpayment penalty will go away completely. Also, you don't have to take more money than you need. If you are short, let's say $40,000 in estimate payments and on track to be assessed around $1,000 penalty for underpaying quarterly estimates, you can take a $40,000 IRA distribution and ask the custodian to withhold 100% for federal taxes. So you will receive zero, and then you will redeposit the same $40,000 within 60 days to keep it non-taxable and wipe out the whole $1,000 penalty. Here is a couple of important things to remember to make it work. 60 days is a real deadline. Set the reminder the moment you take the money. If you miss it, and it's become taxable. 1 per year IRA rollover rule. Only one 60-day IRA to IRA rollover every 12 months. So don't double dip. And 401ks often have mandatory 20% withholding and access rules. So IRAs are usually simpler for this reason. Now, if you are 73 plus and taking RMDs, required minimum distributions, you can turn up withholdings on your year-end IRA distribution. It still counts as if paid all year, and it can cover both your RMD and your tax shortfall. Just remember, once an amount is your RMD, that piece cannot be rolled back. So set the withholding right up front. What not to do? Please don't try to fix it by paying yourself W-2 bonus in December. All it will do is increase your payroll taxes and can mess up with your Section 199 QBI deduction as well. 9 times out of 10, it's more expensive than the problem we are solving. The withholding strategy is cleaner. And you can always reach out to us for help. And here is what we would do for you. You will tell us your 2025 shortfall, ballpark is fine, or we can estimate it for you. We pick the account, IRA, 401k, depends on plan rules. We will give you a script to call the custodian and request a distribution with federal withholding for that shortfall. Immediately calendar 60 days from the day after you receive the funds and redeposit the gross amount, what you receive plus what was withheld before day 60. Save the confirmations, dates, amounts, withholding instructions, very important. And on the tax return, we will apply the rules so withholding is treated as paid evenly across the year. That's the secret sauce that clears the penalty. Then we will tune up your 2026 estimates so this doesn't pop up again. So missing a payment doesn't mean you're careless. It usually means you're investing in growth, in paying people, and in life. You are running a real business. This is how we keep you from getting punished for being human. If you want help, DM the word eraser and I will send you step-by-step checklist to implement the strategy to completely erase the penalty you are facing for underpaying estimated taxes. Next week, I will show you how we put estimates on autopilot for lumpy cash flow so you can stay penalty proof. Thanks for hanging out with me today, and remember, it's not only about how much you make, it's also about how much you keep.